Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday and it's April 16th. I hope you guys had a wonderful weekend here. Today, we're just going to jump right into it because we've got a lot to go over on the economic calendar today. This week, for the most part, it's going to be pretty data dependent this week. Friday's about the only day there's no data being released, but Monday through Thursday is going to be pretty packed here. And today, as you can see, we'll start off with the retail sales for the month of March. So in February, it dropped 0.1%, but for March, the forecast was at 0.4% growth, and it went up 0.6%. So great numbers there. So if you take out big ticket item like autos here, which obviously has a big number there and can easily maneuver numbers here. We look at this kind of more of a core number here, and it gives us a 0.2% increase in the month of February. Forecast for the month of March was supposed to be 0.2%, and it came in at the forecast number at 0.2%. So that continued growth. This is a nice, strong number that we're seeing in retail sales, which is great news here. Empire State Index, this is manufacturing in the New York region here. So we see obviously a dip here from the month of March, which was at 22.5, and it dipped down to 15.8. Now, a lot of this has been kind of attributed to the talk of tariffs and the trade war. So a lot, of course, manufacturers, as a result, figured that we're going to probably be needing less inventory, don't want to be stuck with it, so they pulled back on their manufacturing numbers so far in the month of March. So it'll be interesting to see how much like Chicago and some of the other places like Philadelphia will show up later as well. Now, we also got the Home Builders Index. This is kind of a confidence level that's sent out as a survey to the different home builders across the U.S. And we had a very high number in the last reporting in March at 70. And we still got a very high number, even though it came down slightly to 69. Anything above 50 on this basically is considered expansion or more or less optimism here, which is great. Obviously, we like them. We need more properties, or we need more inventories, so we like that they are confident where things are moving. Business inventories still kind of going up the same pace here. So in January went up 0.6%, and the month of February it continued going up 0.6%. Now, the headline news, stock market is up. They're shrugging off the Syrian attacks over the weekend. I guess they were so strategically placed that they just don't think there's going to be retaliation of any caliber, especially from Russia, that it looks like they're just shrugging it off today. Now, we got, again, continued more 2018 Q1 earnings reports. We'll probably get that for the most of this month here, at least a good portion of this month. And that could pretty much dictate the market. So far, everything's looking pretty rosy in terms of what's being reported out there. So let's jump over and see how this is affecting the bond market. Bond market, of course, took a pretty big beating. Last Thursday, it dropped below the 25-day moving average. We've been down that world before. Right now, we're down about 9 basis points from where we left off on Friday, which is from this point here. It looked like it gave us a little bit of a fake that it looks like it's going to go up, but it didn't, and it continued down. Now, our next level of support will be this level here at 101.891, and after that would be 101.563. So we got some room here where we could potentially go down and maybe even test this floor of support before we get any improvement in our rates again. But for the most part, we got the 50-day and 25, which is going to kind of give it a double floor ceiling or resistance, so it's going to even strengthen that a little bit further here. And on the other note, we already saw that in the yields here, where see how it's kind of keeping us intact. But now the yields are breaking above this 50-day moving average, and it's got a nice high ceiling here, where we are a lot of room here for next resistance level here, and again could see rates continue to rise in the duration here. So be very cautious out there. 10-year sitting rate at here, right above this 50-day moving average, and of course it's got a lot of room to grow. So rates could continue to rise as a result of that. So that pretty much wraps things up. But if you guys want to get more data, just come over to Twitter. I do post data on Twitter throughout the day, and at Mike Bjork. Otherwise, I hope you guys enjoy the rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.